The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show like we usually do, looking at the DAX index. And as you can see, after we made that 1.618 expansion up at the high there, we've been in a minor downtrend, and it's continuing on this morning, probably being helped a little bit by the fact that we're lower here in the stock indices for the United States for the first time since Moses finished the Ark. So this is going to be interesting. We'll cover that in just a moment, but we want to get on and take a look at the FTSE first. You'll notice here that we had these lower tops there at 618 retracement. Folks, that's that 135 pattern that we've talked about from Roy Longstreet that works quite well. Those cycle highs need to be very, very close. In other words, from high to high and high to high need to be very symmetrical. The retracements need to be pretty much spot on, and that's what we've had. You notice that sets up a move down to around 75.5. That means we've come down well over 300 points in that FTSE after we've made that big ABCD on the daily. So there's a minor downtrend now, but we'll cover that as we go through some of the other things that we're looking at. I'll get to gold in just a minute. I know several people are asking. I did want to cover a couple things. One is the fact that this new moon that we had with this eclipse is really a very, very unusual thing. I wanted to show you a picture of what that looks like, and you can see how this thing transforms. You can see the three gold or brown, actually golden brown new moons in the middle there. That is the 3-day window that we're looking at between the 29th and the 31st of the 3-day window into that new moon. So it is a very, very unusual one. We haven't seen one like this since 1866. Let's take a quick look here at the, this is something from NASA that one of our folks sent us here at TFNN, and it basically shows the Fibonacci spiral in radar waves. It's really amazing. You can see how these things move around in a perfect spiral, which is, really how the universe works. This is something that Isaac Newton was very enthralled with. Okay, we'll move on now, and we will talk a little bit about the stock market here. I got several emails about one subject, and that was about Park City Peter. A guy here, and Peter from Park City, Utah, was talking about selling the S&P and using a 30-handle stop. And the two people that asked me a question, how can he use a 30-handle stock and stop? And I said, well, very simply, it's his money, and he does his analysis. Well, it turned out, to be a very, very good trade, and I'm sure Peter has lowered his stop down to that level, but it gets down to responsibility, folks. The folks in the room here at TFNN put some really good information, but like everything, sometimes they're right, sometimes they're wrong, so you have to take responsibility, for what you're doing, and that's the key, to all of this. So remember, that's an important thing to do as you're going through this. Let's start out this morning with the stock market, and we will take a look at what we're looking at here. This comes from our good friend Mr. Z in the room. He posted this, I believe, a day or so. I think he posted it yesterday, as a matter of fact. This was a very large ABCD pattern that you can see, and he's talking about the important high at 2872 on January 29th. I believe that's when Park City Peter was in there doing the same thing at the same time. So they were looking at very similar type moves with ABCD types moves. Now, what we're going to do now is we're going to go across the pond again from one of our friends and show you the chart they were looking at to show you this stuff does work, that people do the same type of work. You'll notice the big ABCD pattern in the S&P 500 measuring up there to that high that we made at 28.78. Now, the $64 question is, where were these retracements supposed to come from? If you'll notice the two red arrows on the right, you'll see the first one was at 28.55. And the second one was at 28.48. This is very important on that second one because I want to show you what happened. Go down just a tiny bit lower, and you're going to see the 3-day, which was a 2-day low there. That's what that means, the low from 2 days ago at 28.30. That should be some support also because it's going to be 61% off of the low of several days ago. That's why if we go below that low, we're going to be looking at something pretty nasty, at least a 5-day move down. And whether it has anything to do with what's happening in the world today, I'm not sure. But let's just take a look at it this morning, and you'll see what we're looking at here because this is the same chart, only what we're looking at here is you see the market broke through that 28.48. It went right down to touch the low that it made on last Thursday. And so that's all that's doing is just touching that low. Then we had a rally. We haven't got any higher than 28.46 so far. We're now trading around 28.34. So this tells us because these rallies were nearly equal that we had, each rally has only been, roughly, 20 points off the bottom. Well, 15 points off the bottom. So that tells us that we're most probably getting ready to take out the 28.30 level and go down a little bit more. Folks, this market's been up. In January, it's been up 19 out of 21 days. I mean, this is what we call the very, very overbought market. So it's due for a retracement. And it's doing it very normally. I mean, it's making nice rallies. I mean, we had a 15-point rally in the middle of the range yesterday. We had another one this morning. So even though they're not much, that's all we're getting right now because the trend is actually turned down. So that's what it looks like from, watching this as where we stand. Now, will this be the high in the market? God only knows. And like I said many times, she doesn't trade too much anymore. So let's keep an eye on it. But there's some really good indications of what's going on in some of these markets by using technical analysis. And that's really what we're looking for. And we're just trying to get a small edge, to see if these things actually do work. The one that really is exciting to me so far today is the fact that the gold stopped exactly at $34 down from the high, and that was actually it was $35 down from the high, but it went spot down to the perfect ABCD correction in the gold. We'll cover that after we come back from the break, but it certainly looks like we've had some really interesting patterns here starting this new moon scenario and lunar eclipse. So I imagine when we have this thing tomorrow, it will really be quite spectacular. It might be another up and down move. I don't know. But we've had some really big ABCDs happening in the euro, i.e. the U.S. dollar index, and also in the gold market, and then also in the crude oil market. All of them have, performed really nice ABCD patterns overnight. So we'll see if we get follow-through on some of these. So we'll take a little break here, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we want to talk a little bit about this gold market. We've got a lot of things happening today. We've watched several of these markets, make some pretty good corrections in here, and it's going to be interesting if these Treasury notes and Treasury bonds can stay where they are, because we have a really nice three-drive pattern on the hourly chart on the Treasury bonds at 147.12. And we rallied a full point off of that. Now we backed off a little bit. I'll post that chart in just a little bit, but I wanted to finish the gold because I think that's the one that really is very, very interesting because of where we really are with this $34 correction in gold with the big ABCD that I've already posted. The thing that troubles me the most, I'm going to do two charts here to show you, really where we are. The first one shows the relationship of the gold in relationship to euros. Let me get this so that we can see it just a little bit better. There we go. And you'll see that when you're buying gold in euros, it is really a big difference. You'll notice that we're making that 135 pattern as opposed to making new highs in the U.S. dollar. That's because the U.S. dollar was much stronger. Now it's weaker, and that's causing this to reverse. This could be extremely important here because if you'll notice back in 2017, we had the same type of situation occurring, and then we had the big move down into December of last year. So we really need to watch that very closely. The one thing that I feel very strongly about, folks, and I want to repeat this, and of course this is my opinion, and opinions are like armpits. Everybody has one. Anyway, what we want to look at here on this gold, we've made this beautiful pattern here. So far, we've rallied $11 off the bottom very quickly, which is a very good sign. But if we go back below that 1133 level, that is going to be extremely bearish to the gold market, because all that was a 382 retracement off the bottom, $11. The last time we broke after we made the high at 1366, we only rallied $17, had the half of the harmonic number. So if we don't get any higher than $17 off of this bottom, that's going to take us in around 1348. That's going to be a negative sign too. But the one thing to keep in mind is we must not go below that 1330 level again. That if we do that, that is going to be extremely bearish. That would be a situation that we're looking at in cycles that we call, left translation, where the cycle high comes in really early in the cycle and then continues to go down. And what could be causing it are two things. One is the fact that silver is diverging badly, and two is the relationship of the euro in gold versus the euro, the gold versus the U.S. dollar. They're two different things. So people around the world that use euros, they're buying it at a different level. It's not the same as we're looking at a potential breakout here. Now let's look at this breakout just a little bit differently. We're going to take some advantage here with one of our good friends up in Salt Lake City, one of our favorite folks that we've worked with for well over what's been 30 years now, pretty much. She was just a young whippersnapper when we started, but now we'll take a look at this. Anyway, you'll notice on the left-hand side, you'll notice the euro that's there. You see the red line where the euro stopped. That was the 20-min line that we talk about quite a bit. We stopped just about spot on to it at 125 and change. We were, referring to that last week. And if we go over and take a look at the gold, you'll notice that we have this type of a gold that looks like it's breaking out. But if you look at the breakout versus the euro, that's a totally different thing, because in the gold, we're making a 135 in the euro versus the U.S. dollar, what looks like it's broken out. And right now it looks like a false breakout because we've broken $34 in 2 or 3 days. So that could be very important. So the key level here, from my perspective here, is at this 1330 level. If we take that out, that's going to be very, very bearish. And the level to look at on the upside is the half harmonic number, which is 1348. That would take you to the 78% level of the previous swing high we made at 1356, and that would be near the 382 level of the whole move down. Excuse me, that 50% level of the whole move down, and that would come in also at 1348. So if we can get it above 1350, we could be off to the races. That's the main thing to keep an eye on. That's pretty much it. I'm going to do my best to get this bond chart up here because it's that important. And we thank Marshall for bringing this to our attention. I did post it, but for some reason, as you know, my posts have a tendency, to disappear. Guess what? I got it. There it is. The little rascal's hiding from me. Here we go. There we go. All right, get ready here. You'll see here. Hold on one sec here. There's the Treasury bonds. You'll notice there, that 1.618 expansion down there. That's a 3-drive pattern to the downside. But folks, this thing is, Tom, I'll tell you what. I'll actually buy a boat, a very small one, if the bonds get back to 165, 170 again. Who knows? Peter, thanks a lot for your post about your thing on the stocks that you were selling yesterday. I had 2 people email me saying, gee, that guy must really have confidence in what he does. And I said, well, he's a professional trader. So hats off to you, Peter, for posting that post on the S&P yesterday. But these bonds look very, very weak, folks. We posted the work from our good friend John Cheney, Mr. Z in the room, that showed the T-notes breaking down. I believe they're trading at around the 10 years at around 270 now, and the old magic number was 260. So that will most probably be resistance if we do change that. So the rates are going higher. It's just a question of when and how much it's going to go, but they're starting to accelerate here a little bit. I wanted to bring one other chart to your attention. This is and I think this could be the mother of all false breakouts, and that is this was published on the internet quite a bit. It's about the value line index. And folks, the last time I saw the value line index when I was talking with Moses when he was working on the ark. So it's going to be you can't swim the Wabash, Mr. Z. It's too muddy. Anyway, you'll notice that this is broken out to the upside, but frankly, I don't think enough people trade this to even make it count. But this was posted on the internet, and I thought that I ought to bring that out. There used to be one of the biggest spreads in all of trading back in the 80s was the NASDAQ value line spread, because the NASDAQ had just started trading around 73 3, I think. We had 72.73, and the value line had been around, and they used that spread, and the value line was way expensive to the Nasdaq, and that thing reversed, and it would make the chart similar to Bitcoin, that's for sure. And that's one thing we've got to cover here. Is when we get back from the next break is the Bitcoin, because I really think we're getting ready for a pretty sharp move down in Bitcoin. We'll cover this, of course, when we get back to the break. But technically, guys, it's just as nice as it possibly can get as far as a technical pattern. But we'll cover it when we come back from our break, because I know I don't have enough time to do that now as the music starts. So we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're going to take a look at Bitcoin here, because this market looks like it's ready to take a little fall off a ledge here. You'll notice these higher bottoms that we've had here since the 16th of January. What's interesting here is we've had a lack of rally, and that is really a pretty good example of the high translation of the cycle making it early like it did on the 21st of January, and then it backs off. It's made support, and it still has a potential to go through here. But if we break below that 10,000 level, this is going to take us for a new leg down. And remember, we have that really large ABCD down there, slightly below the 8,000 mark. So that's what I would think it would be doing. Now, these cryptocurrencies and blockchains are getting all kinds of negative reviews and press and everything else. And as a matter of fact, Martin Armstrong even came out about something about quantum crypto something or other that I couldn't understand, far above my pay grade, that was supposed to be even far better than blockchain. So there's a lot of stuff going on out here. I don't know if this is a bubble or not. I don't think that it is. It's acting technically as well as it could act, but we are looking like this market is beginning to get a little bit tired. And the reason why I say that, if you'll notice over the last few days, and this is a 4-hour chart, so you're talking a lot of time coming in here. You'll see that the rally that we had where we completed this small ABCD pattern at the 12,000 really was very, very weak. You would have thought we would have been making the larger ABCD pattern up around that 14,000 level, which would have been a beautiful Gartley sell, but we didn't get that. So that's telling me that we could be looking for some weakness here in the Bitcoin. But if it does hold this level, and we have to give it every instance of doubt here, because it can easily do that, we still have a chance, for another move up. I don't believe that this market is in a bubble, because it's just acting, just so perfect technically. You can't even you just can't deny it. I mean, all the swings are easily measured. They run to the ratios just exactly like we expected. So these are the types of things that you really like to see. You don't get to see them all the time, but when they work that way, that really makes it interesting. Now, someone's asked a question about these notes and bonds. Folks, these notes and bonds, they're really bearish. Let's just take a look at this bond chart. This was as of last Friday, and we've had we're down another point from that level. So we're down below the 78% level, and we are we're due for a bounce just because it's very oversold. The notes have already taken out the lows of the year. Mr. Z was kind enough to send us that chart yesterday, and so we've broken down. Rates are going higher. The question is, how much are they going to rally if they do? And the easy thing to do is to find a good point for a sell point. Try to find an ABCD pattern, contracyclically in these notes and bonds to get short, because they certainly look like they want to go lower. That's the way it looks. That's the way it looks to me. Let's check the markets to see how they're doing. I'll see what we're going here now. We're still holding out. We've held that 30 level, 28. We actually went a little bit below that 28.30 level, so we're having a bounce back now. But this sets up lower prices now in the stock market, and I believe the fact that we took out that low from 3 days ago doesn't mean a whole lot. The good thing is that we've now rallied in the gold. We've got up to we're up $15 off the bottom now. That's really close to that. Once we get above 1348, that should be ready to go pretty good. The bonds are still coming down. We're 147.17, and they look like they're ready to take out those lows also. Another interesting one that should be on your radar is to keep an eye on the crude oil, folks, because let's just bring this chart up for you to take a look at it, because we're making a really nice ABCD pattern in crude oil right now. And let's just get this up here so you folks can see it. It'll only take me a minute, I do believe, and I can draw this in without too much trouble since someone has asked me to do that. We'll just put it up here. And there we go. We'll get up here so we can take a quick look at it here. You'll be able to see. I hope this post's okay in the room, but you'll see we are making a 61% retracement down here at the 64.50 level in the crude oil, and that should hold it if it's going to be any good. This is very similar to the $2 break that we had during the 15th to the 19th. We are now breaking exactly $2 to where we are right now between the 25th and 30th. So there's a lot of symmetry here in the crude oil to hold this 64.50. However, if we get below $64 a barrel in the crude, that's not going to be good. So your risk factor on this would be about 50 pips. The thing that I don't like about it is there's been a pretty big drop here real early this morning, very quickly, of around 50 pips down to where we are trading right now. And so the best thing to do is to wait to make sure this wide range bar dissipates itself and you don't try to catch a falling knife, because that's really not necessary. But there should be some good support here at the 64.50 level. We're trading at 64.43 right now, so we have to be relatively careful. Let's just double check the exact 61% retracement on this to make sure I'm not missing anything, and we haven't quite hit it yet. The 64.35 is the exact 61% retracement, so that's one that you really would, anything, that's why I say below 64, you only have to risk about 40 pips in here, which is $200 on a contract that's worth 64,000. So keep an eye on that. It's very similar. We have the same thing happening in the euro. We went down yesterday in the euro last night and completed a beautiful ABCD pattern in the euro that was very, very nice to see. We got down to the 23.40 level. Let's just bring this one up to let you folks take a look at it. You'll see that we hit it pretty much spot on, and we were able to get a really strong rally. And then we'll take a look here. Someone is asking me a question here in the room. Just let me ask. It says, is bonds and dollar will go lower if we keep going like this? I don't do this intermarket stuff, folks. Confuses the heck out of me. I know John Murphy has wrote a lot of information about it. The problem is I look at each of these charts separately. I understand it. If I'm looking at the chart that tells me that we're basically looking at buyers and sellers. If there's more buyers, prices are going up. If there's more sellers, prices are going down. That's about all I can look at. Now, we've got the bonds now breaking into new lows now. We're trading below the 117.14 now, 147.14, folks. That's the 1.618. So it absolutely has to hold right near this level or it's in serious trouble. That means that three-drive pattern is going to be failing. So this is about as low risk as you're going to get here in these Treasury bonds. Anything below the 147 level would certainly be a very, very negative thing, but we are down near this interesting support level, so we'll watch it here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're pleased to announce that we have a guest this morning calling in. Max, are you there?
Yeah, good morning, Larry.
Good morning to you, my friend.
Do you have a harmonic number on crude oil?
I believe the last time I checked, it was 80 pips. I haven't checked it in a while, but frankly, these things don't change very much. But as I recall, it was 88 pips was the exact number. I'll check that, later on. But you can check it yourself if you just go to an hourly chart and look at some of the swings. You'll be able to see it. But I believe it was 88 pips. If I'm wrong, I will check it and report back on it tomorrow. But when it's moving really quickly, it'll do 2 times that. So 88 is basically 190 pips. So you might, and that's pretty much what we're doing now. We're seeing it down $2 a barrel, and so it's probably still at 88. That would be my guess. But go to a half-hour chart and look at some of the swings in there, and you'll see that probably is the one that you'll see the most.
Okay, thank you.
Okay, I hope that helps.
Yes.
I will double check it today and talk about it tomorrow, because I believe that it is correct, because we did these harmonic numbers years ago and they've never changed. So I believe that's it, but I will check it for you, Max. Thanks for calling in, by the way. I appreciate it, and Happy New Year to you.
Thank you. Same with you.
Okay. Someone told me today that the spread on the Super Bowl game was out to 10 points. Is that correct? I don't follow that kind of stuff, but they said that the spread was 10 points, that the Patriots were a 10-point favorite. I find that really hard to believe, but we'll see. Anyway, I'll watch the game. I don't bet on it or anything, but I think I'm going to bet this year on that there might be a safety, where they get the team behind the goal line. I think that pays 12 to 1. I think I might make $20 on that, just because it doesn't happen very often. But with these two good defensive teams, you might see something like that this year. We'll have to wait and see here. Okay, we have another question from one of our listeners about Tesla, folks. There's a big fight between what's his name, Jim Chanos and of course Elon Musk, and all I know is the overall long-term trend in Tesla is still to the downside, but it's still $300 and some a share. How you can hardly call this stock cheap, because it never makes doesn't make any money as of yet, but it makes a pretty good product, as I understand. But I don't understand anything other than that. I look at the charts, and frankly, the fundamental stuff is just far, far beyond my pay grade. So that's another one that I think is pretty important. See, One other question that someone's asked is about the British pound. Folks, the British pound has made some type of a pretty significant top up in here. We broke all the way down. Let's just bring this up because I haven't corrected this from last night yet, but we got all the way down to right below 140, 139.50. That didn't quite touch that old 61% level, but we bounced a little bit from that level, but we broke over 300 pips in a day and a half after hitting the 78% retracement there on Thursday. And so I really believe that, this market is in for further correction. All we've been able to do so far in the British pound is rally, 38% back from the high. We got up to 141 and change so far this morning, stopping exactly at the 382. And whether that's going to be it or not, I'm really not sure. You've got to give it a little bit more time because it's, you're only talking about a few hours here from when it bottomed. So I think you have to wait, to see if that's going to mean very much. The U.S. dollar index, we talked about that, several times from the perspective of hitting that exact 61% retracement here on the long-term weekly down there at the 88.20 level. This morning we're trading at the 88.88, and that's included the the drop that we had in the euro, because we did touch that 88.28 again when the euro got up to the 125 and change. So that looks like we're getting ready to move a little bit, probably bounce a little bit from here to see if we're going to hold this level for any prolonged period of time. But it's basically based on what the euro is going to do, and we'll have to wait and see. But that's a really important number, 88.28 in the dollar index on that long-term weekly, because there's two big numbers sitting right there, and they certainly have to look at that. Folks, one of the questions someone's asking me, that Dan, is about Martin Armstrong. Folks, Martin Armstrong, he's in a class all by himself. I mean, he's a really, really smart guy, and he knows it. And but he doesn't hold anything back, and he's a very, very brilliant fellow. But some of the things that he talks about are frankly far beyond a normal person's pay grade. And everybody that belongs to that, please raise their right hand, as I'm doing right now, because believe me, he's really a smart guy. I met him first in 1988, and he was smart then, and he's smarter now. So. But he does have some great ideas, and he certainly talks to people who are smart too. There's no question about that. But he does a lot of very esoteric stuff that helps him, describe some of these markets. And as you know, he is extremely bullish stocks. And what we're having now is it looks like our first 3-day correction, since Moses started building the ark, which was many, many years ago. So. We'll see what happens. We've got the State of the Union tonight. I don't know whether that'll mean much to the market. If it does, it'll probably be short-lived. But with short-term, because of that new moon that we had with the lunar eclipse that's coming in tomorrow, I think it's today. No, it's tomorrow. You're going to be seeing tomorrow at 8:27 in the morning. That'll be a real trigger, I would believe, for some short-term, volatility. Remember, the VIX index is held up off its bottom extremely well, considering the fact that the Dow rallied over 2,000 points as the VIX went, sideways to higher bottoms, which is a really positive thing. So people are protecting, to see what's going to be going, see how we're going here. Someone's asked a question about the next level in the S&P. If we get below this, we are making new lows right now at 28.50. If you remember, we're taking out that low, so you have to multiply that by 1.27, and that'll take you down to 28.05. But, folks, the key to remember is you're going to see a day on the news, and, of course, they watch the Dow Jones. Remember, the biggest down move we've had, swing-wise, was 350 points. We've already matched that. You multiply that times 1.618, and guess what that's going to take you to? Yes, boys and girls, you're going to guess it's going to be about 500 and some points, 560 points to be exact. So you should see a move one day where the Dow is down 560 points. That is not very, well, it's a lot because it'll be better than It'll be better than 2%, which will be a pretty big move, but nothing compared to what we had when it was down 777 back in '09, when it was trading for under 1,000, or just a little over 1,000. So let's keep that in mind. But watch for 560 as a big down day in the Dow on any one day coming up soon. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I'm back, folks, and the one thing we have to really pay close attention to if you're in the gold market is to make sure that if you bought some more gold down there at that 1334 level, don't let it get below 1330, because if it does that, that's a very, very negative sign, and we have to be able to, protect our risk here, because the way gold is acting in relation to the euro is totally different than the way it is to the U.S. dollar. So, and believe me, there's a lot of people out there, that are in the eurozone that equal what we do here in the U.S. dollar. So pay very, very close attention to that. Now, the other one that we've been watching, of course, are these Treasury bonds. We've gone down. We've made that 3 drive to a bottom now. They took out the previous day's low at 117.14. We've bounced back up it a little bit. The low has been 147.09. So if it's any good, it's not going to take out that 147.09 anymore because it was on a very big volume that it did that. So if you're looking for that 3 drive to a bottom pattern to work, that's something that you might want to keep in mind because it'll be see what's going on. So we'll watch that very, very closely. I'll try to post this 3 drive pattern here in the bonds one more time so you can see it, because I think it's important enough that you'll be able to see how we went down there and took out those lows. Just get this up here for a little bit, and we'll see that. I will also tomorrow I will go over the harmonic numbers for the crude oil and double check that that's where we are. So pay attention to that. But the 1.618 on those bonds came in at 117.13. The low has been 117.09 on big volume. So watch that. There could be a little bit of a bounce from that level because it's incredibly oversold. But, that's the only thing you have down there is that 1.618. So I believe 09 would be the absolute most you'd want to risk. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!